Welcome to Quick Bite, your fast and friendly Florida insurance
Hello,
update.
hello, hello. This is Roshonda, agency owner of the ISOM Insurance Group, here in the sunshine state of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Monday, March the 2nd, 2026. And can you believe we are in the first month of March? The first quarter of 2026 is almost over. Can you believe it? And we are officially entering the final 2 weeks of the Florida 60-day legislative session. And if you've been following these updates with me since January, you already know we have several bills that we have been watching that got filed, debated, stalled, amended, revived, and occasionally quietly disappeared. But now we are in what I call pressure cooker phase. This is the time when bills either sprint to the finish line or die silently in committee. And as of the end of this week, the end of February, the so-called common sense consumer bills are largely clearing their hurdles. The high-stakes property tax and litigation reforms are now locked in intense House versus Senate negotiations. So today we are doing a full recap of every major bill we've been tracking this session. I'm going to break down what has momentum, what is stalled, and what actually impacts you as a homeowner, driver, business owner, or policyholder in Florida. Let's jump in. When we hit this stage of session, procedure matters more than speeches. Bills must clear committees. Calendars matter, leadership matters. If a bill is not positioned correctly right now, it likely will not make it before the March 13th deadline. That is just how Tallahassee works. So let's start with the new rule many of you have asked me about. The insurance course rule, SB 158 and SB 626. This is what some people are calling the insurance course rule. This falls under SB, again, 158, which is primarily the Pet Insurance Act, and SB 626, which includes broader ethic updates. Here's what it does. Florida is implementing a mandatory 4-hour law and ethics continuing education update every 2 years, tailored specifically to agents' license type. Now, as an agency owner, I actually welcome this. Why? Because specialty lines have gotten complicated. Pet insurance alone now has wellness plans, medical only plans, accident only plans, waiting periods, hereditary, uh, hereditary exclusions, and reimbursement schedules that can confuse even experienced consumers. Under SB 158, agents selling pet insurance must complete a 2-hour uh, pet continuing education course every 2 years. The goal is to prevent misinformation and ensure consumers actually understand what they are buying. The status right now is that it has passed committees and is currently sitting in Senate appropriations. Translation, it is moving. This is one of those professionalization bills that does not generate headlines, but does shape how the industry operates long term. Now, let's move to one of the most controversial bills of the session, SB 1396, also known as the Litigation Investment Safeguards Bill. This bill requires disclosure of third party investors who fund lawsuits. Remember, I've been watching this one. This one is interesting. Supporters argue it prevents hidden financial backers from driving up settlements and litigation costs. Opponents argue it gives insurance companies a strategic advantage during negotiations. As of now, SB 1396 is officially on the Senate floor. It passed the Rules Committee with a 13-10 vote, which signals a party line split. The friction point is in the House. HB 1157 is still sitting in its first subcommittee. That creates the bottleneck. So even though the Senate version has momentum, if the House does not move, negotiations will have to happen quickly. Why does this matter to you? Because litigation costs directly impact insurance premiums. Florida past legal environment was one of the primary drivers, yes, of property insurance instability. This bill is a part of the larger effort to prevent what business groups call casino-style lawsuit financing. The outcome here could influence liability and property rates for years. Also, let's put a little bit color on this. I believe it should be that we know from an insurance company standpoint if you're who's financing litigation. I didn't even know until I started really researching this bill that outside entities outside the United States were even having groups that were financing litigation. I find that a little dicey. So I think we do need transparency in litigation financing. Now let's talk about the Cold War in Tallahassee. There are two major property tax proposals battling for a spot on the November 2026 ballot. HGR 209 proposes a $200,000 non-school property tax exemption specifically for homeowners who maintain insurance. That is the insurance-linked version. It is currently on the House second reading calendar. It has support, but it has slowed down due to concerns about a projected $5.3 billion revenue loss to local governments. Then there is HGR 203. This is the aggressive 10-year phase out of all non-school property taxes for homesteads. It passed the House 80-30 on February the 19th. Now it is sitting in the Senate. And the Senate leadership has essentially said we are not convinced. The projected impact, approximately 14.8 billion annually in lost municipal revenue. That affects police, fire departments, infrastructure, and city budgets. So what is happening right now is negotiation. Neither version is on the ballot yet. For either to reach voters, the House and Senate must agree on one single proposal before March 13th. As an insurance agency owner, I'm watching this closely because if the insurance linked version is dropped entirely, it removes a direct incentive for homeowners to maintain private market coverage, and that could have unintended consequences for market stability. Like I've said before on this bill, I've heard customers argue kind of on both sides of the coin. I've had some customers say that just that it will affect local municipalities and city budgets. And I can understand that argument on that end. And then I have had customers say, well, I feel like, we should get rid of property taxes because you never really officially own your home if you always got to pay property taxes. So I understand each side of the coin. It's just interesting to watch how that one kind of plays out. Now let's talk about what I call the MVP bill of the session, HB 1399, affiliate fee transparency. This bill requires insurers to prove that payments to affiliated sister companies are fair and reasonable. It passed the House 106-3. That is what we call bipartisan, and it's now been received by the Senate and referred to the Rules Committee. The outlook here is extremely high. If this passes, insurers will need to justify internal financial transfers to the Office of Insurance Regulation. The goal is to prevent profit shifting that artificially inflates rate filings. In plain English, this is about making sure money is not quietly moving out of Florida while rate increases are being justified. This one has serious momentum. Next, the AI bill. Again, you know how I feel about this bill. I feel like it's common sense and it should pass. HB 527 prohibits insurers from using artificial intelligence as the sole reason to deny a claim. A named qualified human must review and sign off on any denial. If they do not, there is a $2,500 fine per instance. HB 527 cleared the Commerce Committee on February 26 and is ready for the House floor. This bill has bipartisan support and is widely expected to pass. This is a consumer confidence bill. Technology can assist, but accountability must stay with humans. And I completely agree with this bill. HB 1263 increases oversight of struggling insurers by the Office of Insurance Regulation. It passed the Insurance and Banking Subcommittee 18-0. That unanimous vote is significant. HB 1265 creates a confidentiality privilege for certain documents obtained during OIR examinations, preventing them from being used in private civil lawsuits. These two bills operate together. One increases regulatory authority, the other protects examination materials. Both are moving steadily. Now let's address what is likely not happening this year. SB 522, the PIP repeal is stalled. Who didn't see this one coming? Without movement by now, it is unlikely to pass before March 13th. Florida will remain a no-fault state for at least another year. HB 459, the disputed claims bill, was withdrawn. It is officially off the table. As of March 2nd, 2026, HB 1399 is very likely to pass. HB 527 is near final approval. SB 1396 has strong Senate momentum and House uncertainty. HGR 203 and 209 are locked in negotiation limbo. SB 158 is moving through appropriations. SB 522 likely done for the year. The next 10 days will determine which of these shape Florida insurance policy for the next decade. If today's quick bite helped you understand what is actually happening behind the headlines, that is the goal. Legislation affects rates affects budgets affect families. If you would like to review your current coverage or request a quote, please visit our website at isaminsurancegroup.com, which is also right below me in the video. Preparation always beats reaction. If you found this episode helpful, please like this video, share it with someone who owns or someone you know, and drop a comment below which bills you want me to keep tracking for you. Also, please subscribe to the channel so you know when a new video drops. Quick Bite episodes drop every Monday, Wednesday, and Friday at 2 p.m. Eastern. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional regarding your unique situation. This is Roshonda with the ISAM Insurance Group here in sunny Florida. Thank you for watching. I'll see you next time. Please stay safe out there. And as always, bye.
Thank you for watching. Visit us at isaminsurancegroup.com.